Many retailer companies have no choice but to accept cryptocurrencies in the very long run. And if they don't accept cryptos for payments, a lot of retail companies can go bankrupt. And I'm going to explain why. So if you sell a product and you compete with Amazon or Walmart, then it's really tough to be competitive with their EDLP, which stands for Everyday Low Prices strategy. Profit margins, we know, are razor thin in the retail sector. So if you accept payments using Visa, MasterCard, or Amex, then your fees that you pay those credit card companies can be somewhere between 2 and 5% and sometimes higher. And if your profit margins are single digits, you just can't compete. However, if you accept cryptocurrencies, then the fee structure is actually close to 0%. So this means that in the very long run, if you want to sell a product and you compete with Amazon or Walmart, you have to accept cryptocurrencies. And this is a wonderful secular growth investment theme because finally, the oligopoly structure of the credit card business can be disrupted because credit cards charge us fees of 20% in many countries. And this is criminal. And as we all know, competition is great for the consumer.
The game has officially changed for 2026. The legal foundation for the greatest wealth transfer in history is upon us through the Clarity Act. The act is the green light big money has been waiting for. If you hold any of the ISO 20022 coins, you're not going to want to miss this video. We're at the beginning of a new era and the end of regulation by enforcement. The bill doesn't just help crypto, it gives clarity by reclassification of digital assets like XLM, XRP, XDC, HBAR, Metal, XPR, and others as the backbone of the new global financial system. Institutional giants are already behind a curtain purchasing digital assets. Stay all the way to the end and I'll break down the connection between a DTCC, Securitize, Corda, and how it all connects with the explosive Clarity Act. After the video, you'll have clarity of how 2026 is the year of mass adoption. Don't forget to hit the like and subscribe. Let's begin. If you're interested in keeping your crypto safe, down in the description you'll find an incredible discount. And in fact, it's the year's biggest discount. This is your last chance to get an awesome price on an awesome wallet.
The Clarity Act. You want to know if it's dead or alive? Well, it's very much alive. Here's the latest download from Capitol Hill. The bottleneck is breaking. Everyone thought the Clarity Act, officially the Digital Asset Market Clarity Act, was going to die in the Senate Banking Committee after it passed the House back in July. Wrong. My sources tell me that Committee Chair Tim Scott and Senator Cynthia Lummis have just finished the reconciliation phase. They aren't just voting on the House bill, they're merging it with the Senate's Responsible Financial Innovation Act. This is the mega bill we've been waiting for. Remember the 12 Senate Democrats who released that framework back in September? Well, they just signaled they're ready to play ball. That means we officially have a filibuster-proof majority to get this to the president's desk. Why does this matter? Well, this bill is the final piece of the puzzle. The Genius Act, which President Trump signed in July, fixed stablecoins. The Clarity Act fixes the market structure. It officially hands the keys for spot crypto markets to the CFTC, Caroline Pham's agency. It kills the regulation by enforcement era once and for all. Clarity Act isn't just making its way, it's bulldozing its way through.
The Clarity Act is the holy grail. It's the final piece of the puzzle for ISO 20022 coins like XLM, XRP, HBAR, Metal, XPR, XDC, Algorand, Quant, and so on. HR 3633, the Clarity Act, is about to be passed hopefully sometime this year. Now, the bill has already passed the House in July of 2025 and is currently the primary focus for the 2026 Senate. Now, this is great for the entire crypto market, but especially highly bullish for ISO 20022 compliant coins. because it specifically aims to provide regulatory clarity for digital assets to be used as commodities, which aligns with institutional cross-border and banking-focused nature of ISO-compliant projects. Now, by defining these assets as digital commodities and bringing them under the oversight of the Commodities Future Trading Commission, or CFTC, instead of the SEC, the bill removes significant legal uncertainty for institutional adoption. The most important part of the Clarity Act is that it creates a new asset class called digital commodities. Previously, the SEC argued that if an asset was sold as a security investment contract, the asset itself was a security forever. This trapped assets like XRP, for example, in legal limbo. Now, the Act explicitly states that an investment contract asset, which is the coin, is distinct from the investment contract itself, which is the fundraising deal. The result is that legislation officially places assets like XRP, XLM, and HBAR, for example, under the jurisdiction of the CFTC, which is much more friendlier to spot markets than the SEC. In a way, the Ripple lawsuit actually helped frame this whole regulatory framework. Now, why is the Clarity Act bullish for these coins? Well, most of these coins are designed for seamless data exchange with traditional banking systems. The Act helps bridge this gap by establishing clear rules for digital asset custody and transactions by financial institutions and banks. Now, while the Clarity Act is generally viewed as bullish for the overall industry, its specific focus on clarifying the rules for digital commodities makes it particularly bullish for these coins that are already aligning themselves with established institutional financial standards and compliance. These are the real-world utility coins. Now, how is this bullish for XRP? Well, it gives institutions permission and clarity to use ODL, or on-demand liquidity. The Act legislates the outcome Ripple fought for in court. It confirms XRP is in fact a commodity, which is important for future projects. Ripple really did set the stage. Now, this gives us clear rules that XRP is in fact a digital commodity. The biggest hurdle for Ripple's ODL, or on-demand liquidity, was that major U.S. banks, like Bank of America, for example, did not want to touch XRP because of reputational risk. Now, there's also the Nostro play, which the Act explicitly allows banks to custody digital commodities. They're allowed to hold them now. This clears Basel framework and a runway for banks to actually hold XRP on their balance sheets to facilitate cross-border settlements, rather than just using Ripple's messaging software, RippleNet. Now, how is this bullish for Stellar XLM fans? Well, like XRP, XLM becomes a definitive digital commodity. As well, this helps Stellar focus on retail mass adoption for banks to use the technology. One of Stellar's strong points is stablecoins and on and off ramps, or anchors. Stellar can operate with confidence in what were considered gray areas around the world in the past because of Clarity. So the Clarity Act works in tandem with the Genius Act. Now, this also has a significant impact on HBAR. It's great for Hedera's compliance and mature metrics. The Act has a provision for mature blockchains, and Hedera's governing council structure in the past has been criticized as centralized. However, this Act provides a clear path so that Hedera can prove itself as truly decentralized. Now, HBAR targets enterprise users such as Google, IBM, Boeing, and so on. So these corporations effectively froze Web3 adoption due to the lack of clarity. So with this Clarity Act, corporate treasuries can now legally hold HBAR to pay for network services without all the nightmares. Now, this act validates Hedera's model of compliance-first governance, likely making it a perfect chain for Fortune 500 companies. How is this bullish for Metallicus with Metal Blockchain? The merge of personalized banking and crypto. Under Section 310 of the Clarity Act, it's vital. It addresses the treatment of custody activities by banking institutions, which includes credit unions, which is currently a very big hotspot for Metal Blockchain. Metal Blockchain and Metallicus has always focused on Layer 0 compliance, building identity KYC directly on chain. They are building the bank of the future. The clarity will be the compliance that they need to pave the way for mass adoption. Now, previously, regulators fought the idea of a crypto protocol acting like a bank. The Clarity Act explicitly allows banks to engage in digital asset activities. This validates Metal's entire thesis. It allows them to integrate their Metal X exchange and blockchain directly with traditional banking. Now, the Clarity Act is also very bullish for XDC. It acts as a potential unlock key for enterprise-focused blockchains. Now, while retail investors often focus on pumps, XDC's core utility is trade finance, a multi-trillion-dollar industry dominated by conservative banks and institutions. These institutions currently cannot touch XDC because they cannot legally hold assets that might be unregistered securities. Being a commodity now for the trade world, XDC will be extremely valuable over time. Technologically, XDC expanded its capabilities with cross-chain integration and a new accelerator program for tokenizing assets. Now we're going to hear from Carlos Domingo of Securitize on tokenization. They already have $4 billion of tokenized assets, and it's just going to grow. I mean, this is just the beginning. Now, it's important to know that both Ripple and the XDC network have strategic partnerships with Securitize. They're directly connected. There's also a connection through Wormhole to Securitize with Stellar. Now, Ripple's ecosystem with the XRP ledger is especially important for Securitize by connecting it to major real-world assets through their platform, creating a bridge between traditional finance and decentralized finance. The XDC network also has a very important partnership through asset tokenization. Securitize has long supported the XDC network integration. It acts as a blockchain for issuing compliant digital securities, including tokenized U.S. treasuries and private equity. It's also enterprise ready, which is what Securitize loves. The XDC network provides a fast, low-cost EVM-compatible platform that helps Securitize offer a fully legal and interoperable environment for tokenized assets connecting to major financial players. Now, if you've been subscribed to this channel for some time, you know that I've been talking about the DTCC's connection to the likes of Ripple and the XDC network through R3 Corda, the Corda settler. Well, there's also a connection with Securitize, so it's incredible how this is all interconnected. And we recently had great news. If you've recently seen on the channel, I talked about DTCC, how they had the green light from the SEC to flow tokenized securities. So the DTCC is directly connected with Securitize because the DTCC acquired Securency in late of 2023, integrating their digital asset technology to build out their own blockchain-based infrastructure for tokenized securities, which includes the networks such as Ripple, Stellar, XDC Network, and Hedera. So now we're actually going to hear from Carlos Domingo on tokenization.
More Securitize CEO Carlos Domingo joins us here on set. Carlos, welcome.
Thanks for
we were just talking during the break that you've been working on this for 8 years or so, but only in the past 6 months or so has tokenization really come to the forefront, to the mainstream in terms of being a theme on Wall Street. Why do you think that is?
I think partly, obviously, because of the regulatory changes and the new chair of the SEC, Paul Atkins, who is a big proponent of tokenization, and how they've embraced the industry, and that has made the more traditional firms, if you want, that obviously are very conscious about taking regulatory risks to start taking this space more seriously. And the other thing I was mentioning to you is, I think 2024, when BlackRock decided to enter the space with us, and being BlackRock the largest asset manager in the world and one of the most arguably influential firms in the space, that was also an eye-opening for a lot of people that, make the space grow significantly.
Explain to the average person out there why things should be tokenized. Things seem to be working fine right now. So what does tokenization get you?
Well, yeah, things work fine or not, depending on what part of the industry works. But essentially, it's a very simple idea. So everything you own, whether you own stocks, bonds, funds, money market funds, treasuries, whatever, the ownership is recorded on a ledger, right? Somewhere it says that, you own X shares of this. And then every time there is any sort of transaction, you trade, you redeem, you get a dividend paid, et cetera, that involves updating sometimes multiple ledgers that are siloed, that are outdated technology, that are not connected to each other. And even though things seem to be working well, the reality is that behind the scenes, there's a lot of plumbing that, intermediaries and inefficiencies that people are not aware of it. So if you think about what tokenization is, it's essentially upgrading the ledger where capital markets run to a better ledger technology that is public, that is, distributed, cryptographically secured, etc., which will improve how people transact with securities.
Carlos, congratulations. You have a 20% market share of a market that seemingly doubles every year or two. And some of the projections are pretty extraordinary. I don't know if you can keep the 20%, but even if it's 10 to 15% of that growing market, it's a significant market share that you have. Can you do the math for us here?
So the market today is very small, actually. We're the largest player, but the market is around $25 to $30 billion, depending on how many things you include there. Even if I don't keep 20% market share, if I keep 10% market share, but the market really goes to the bottom of the projections is like around $2 trillion. So $2 trillion, 10% of that is $200 billion. So our company will grow tremendously in the next few years. So it's a very exciting part of the market to be.
Carlos, when you look at the opportunity, is it real? Like, what's the biggest impact? Because I can make the case for anything to be tokenized, but there's certain stronger cases. Is it real estate? Is it artwork? Is it collectibles? Is it bonds? Where do you see the biggest opportunity to leave your footprint?
Actually, it's the other way around. Like at the beginning of the industry, people were very excited about illiquid assets like art or collectibles or real estate, etc. And I think what the market has come to realize in the last few years is that the most liquid assets, by tokenizing them, you make them even much more efficient, easier to transact, eliminate intermediaries, etc. So the largest asset today tokenized is actually the dollar, right? Stable coins are tokenized dollars. And the second largest asset is tokenized treasury funds, which is also a very liquid asset. But by putting it on a blockchain, you actually improve how it transacts, eliminates intermediaries, costs, make them more accessible, etc. So I think you'll see treasuries. You mentioned Apollo credit is good. Bonds, we just released with BNY a AAA CLO product that tokenizes high quality bonds, etc. So we'll see those assets first, and of course, public equities. As you mentioned, we're going to tokenize our own.
So yes. In theory, for instance, for equities, settlement will be immediate, I would imagine.
Correct.
And costs will come way down.
Settlement is in there. So what you mentioned that we announced today is actually that you can actually settle trades between stable coins and tokenized equities on chain instantly, right? Blockchains have this property called atomic settlement that settles two things at the same time. And that eliminates intermediaries, it frees capital, etc. Of course, in some other cases, maybe instant settlement is not what you want, but for the people that want it, the blockchain provides with that function.
These energy prices are getting out of hand and cutting into my Bitcoin mining profits. It's time to do something now. I'm gonna call my good friend Brian with True Power.
Hi, is this Brian? I'm so glad I got a hold of you. I remember you saying I have options to get my energy costs under control. Tell me more. Wow, I can get a free audit report to check for hidden errors resulting in overcharges. Another option is to make sure I'm paying the lowest rate possible, and I can choose between a low fixed or variable rate.
Yes, it's true. You do have options. Even if you live in a regulated state, it's time to get a free consultation on ways to reduce your energy cost, like a free audit. For example, 80% of the time, there's hidden errors which would entitle you to a refund. Let's also make sure you're paying the lowest rate possible. You're never billed for my service. I'll explain everything and answer any questions you have. Contact me. My information is in the description.